Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, May the 2nd, the year 2018. Let's talk trading. Trading while impaired. Short and sweet. Don't do it. I feel like I don't feel good today. Guess I'm crashing from all the political stuff that started since last Thursday. And so I've been, 3, 4, 5 days running on, maybe 6 days, 5, 6 days running on adrenaline. Not much sleep, doing lots of stuff. I am like burnt to a crisp. So, that being said, it wouldn't be a good idea for me to be placing trades. We got to take this seriously. And that's part of the risk management. I'd be putting my portfolio at unnecessary risk to be trading while impaired. I mean, if you're drunk, you're high, you're sick, you're emotionally distraught, you're overly tired, you're just, you're not nowhere near the zone, not even close, not even in the same universe. You don't need to be trading. I mean, you need to take care of yourself first. Health comes first. So not going to do it. Going to rest up. But we can look at what's going on here. We see there's a bunch of New Zealand pairs that still haven't filled the gap. There was one or two up here, I believe, from yesterday. Looks like they filled. So once again, that gap fill trade is definitely lucrative. You can see here the dollar yen pushed up above. You can see it better here, and you can see it's right here out of the wick zone. So that break of that upper wick zone, tiny upper wick zone, proved to be lucrative. And we've got a few over 100 on the range, but here the yen is only 38 pip range. That's really tiny range. Might have to switch back to the euro yen, considering much nicer range here. In fact, let's just leave the euro yen up. Let's look over here. Buy zone trade. There's a trigger here. Take your money. There's a trigger here. Maybe you stopped out. If you did, you picked it up on the next trade. Back in here. Buy zone trade. This was a trigger here. Maybe you stopped. Maybe you scratched there. You can see here it came crashing through. A nice trade. On this particular trade, you either took profit, either when it opened and started heading back, just scratch out, or if it on the way down, if you just rode that trade out, and you can see here, this would have been the place to exit. Okay, you can see we had at this particular point in time, there really wasn't much of a rat zone, but you could still play off of the rat zone here. You could take your chance even though you didn't have the range, just knowing that usually high close and close low is greater than 20 at the end of the day. Looking at the pivot, there's the open, there's the pivot. It hit the pivot, and so it took out that pivot. Pivot trade was worth pips. And you can see here, looking hindsight at the price action, but right at the moment, you can see the 3 ball. Next trigger would be at 131.60 on a green candle. And you can see what happened there. That was probably good 4 or 5 pips. Not bad if you're scalping every hour. Looking at price at the 5 horizontal lines from the previous day or session, however you want to say it. last trade day, maybe that's the best way. Because see, on Monday, it's not yesterday, but the last trade day. But once again, H1 at the line proves profitable. We're looking here at the wick zone. Price does not like staying in the wick zone, as you can see here. And between the zones, we had 26 pips. So, not a bad, if you took this round trip right here, worth almost, 50 pips or so. Not a bad trade. I guess those are the London session. Looks like they enjoyed that ride. Holo set up. You can see it right here. You put in a highest open for the hour. Price went up, came back down through, and you can see a very nice trade worth somewhere in the neighborhood of 40 to 50 pips. And right here, no hairy hindsight. We've got bear candles. You really want to enter on a bull candle leaving, but sometimes you can, if you want to go and take that chance, you can right there, but usually it's best to wait for a green open right here. You can see here it lit up, and you can see why it's best to wait for a green open. And let's see, we might have an open in a few seconds here. Let's just watch, see what happens. Okay, so do we get a bull candle at the 52 mark? Ooh, looks like we do. Now, that being said, let's widen the chart. Let's look at the 1 hour. Now, the question is, do you really want to trade against that? I don't think you really want to trade against that. You can even look at the 30-minute. You pretty much have the same view. You can go back to 15-minute, and you can decide whether or not you want to take your chance. So in this case, you don't want to be in a big hurry. Just sit here and watch, let things happen. And let's see. So once again, see, we've got that wick zone. It's escaped that wick zone. So this is a breakout. So that's, you want to be real cautious playing a holo against a breakout like that. It's like, let that breakout happen and then pick it up. Pick up the trade on a price action trade coming back the other way. You don't have to use the every 10 pips. You just use it basically on the price action. So you can see here, we've got a 3 ball. So next hour, it might be a good chance you could get back in. That's how I would trade it. So that's talking about what I will do in the future rather than a hairy hindsight, what I could have done. And you can see here, since we switched pairs, that we've only saw a little as price action. So what do we have? We have peaks and valleys. You can see here the ask came, dropped below the peak. And we've been selling for the last 340 ticks. So to even time your entry better, you'd wait right now for the bid to get below or get above the 131.50, and then you may be able to trigger long based on the other price action. So this is just one way to time your entry, because price can't go up unless the bid goes past that lowest ask. So the bid has to get above there. Price is not going up. It's going to stay. And let me know once again if those of you who are using either the tick chart or if you're using the spread dots, just let me know how you guys are liking it. I'll just be curious. And looking at the IRBs right here, you can see what happened. There was a nice one right there. Boom, Harry Hindsight. And you can see here we've got more selling going on. Look at that, 400 ticks in a row of selling. That means the bid has not come above the lowest ask at the time for 421 ticks now. Yeah, I know, it's really exciting, like watching paint dry, isn't it? And as you can see, now, once again, the ask is pushing down. So the bid now needs to get above 131.498 for price to go up. Just waiting to see what happens. See, this is trading. Lots of waiting, lots of waiting. Here we go. No. Let's see. M1's going to end soon. There we go. We're still selling. Well, it doesn't look like we're going to get much of a change here. So, once again, you know, if you're not feeling good, if you're in an altered state of your normal capacity, just don't. See, because it's not what you trade, it's how you trade it. So, TheRumpledOne signing off and leaving the bank draining up to you guys for the rest of the day, or maybe next couple of days, however long it takes me to get back to norm.